What's going on, everybody? Happy Monday. Welcome to another edition of Weeds Weekly with yours truly, Kevin Weedmark. Can you believe that we are at volume 55? That is awesome. I can't wait to keep bringing this to you every week. However, I'm going to try to condense them. I was told this past week on my birthday, nonetheless, that I am long-winded. Yes, she said I have a lot to say, so we're going to try and slim that down a little bit and pack this up really quick. You got any additional questions, you just pick up a phone and give me a call. So let's break down what happened this past week, and the brakes are on. That's basically what we saw. We see a slowing economy. All data last week was pointing towards that. We saw interest rates rise initially as we headed into the week. By Tuesday, we were at the highest point we have been at about a month. And then all of a sudden on Friday, we got some good core PCE data, and that put interest rates right back where they were for the following week. And that's kind of a summation of this past week. What we kind of saw is the Fed likes PCE because it's an inflationary number. The other thing that we picked up on this past week is now we're expecting, or traders are anticipating, there's a 53% chance that the Fed will decrease the Fed funds rate come September. That improved from 49%. So as we can see, as inflation starts to come down a little bit, and we get this positive data with regards to it, the odds for for a Fed funds rate decrease, everyone gets a little bit of excited. So that's kind of what we saw last week. Look, there wasn't a lot of fireworks because why? Whoa, Nellie, right? From the famous Keith Jackson, college football. Rest in peace, my man. But are we in for it this week and to boot the following week? We got jobs, and more jobs. We got PMI data. We got ISM manufacturing, PMI data. So we are going to be in the thick of it. And what do I anticipate is going to happen? I think we're going to see a lot of the slowing down, right? So far, what have we seen? Let's just kind of surmise what we've seen so far in 2024. We've seen inflation that is extremely persistent. It is not coming down, and it hasn't up until this point. We've seen really good job growth, especially in Q1. But in Q2, we've now seen a kink in the armor. And what I predict is we are going to see that as we start heading into this election, as we start heading into these summer months. And a lot of that has to do with the consumer. Now, last week we were surprised with consumer confidence coming in a little bit higher than anticipated, which was the reason for the spike in interest rates on Tuesday. But as we can see, that corrected itself. I think that was kind of a blip. And the blip was due to, look, everybody and their mother right now is going through graduation. I don't care if it's right now. We celebrate somebody actually graduating elementary school or kindergarten. So now you had college, you got high school, you got elementary. I think consumer spending and consumer confidence was a little bit up. It's a happy time. My kid is going to move off into the world. Things are going to look great for them. And that's kind of where I think we saw that number as a blip in the road. So I don't think that sustains. I think the consumer is pulling back. Inflation is eating away at them with credit card debt, food prices, service prices, and I think we get much more of the same. So that's kind of where I think we are going to see the market head this week. So what does that mean? I think the slowdown is coming, but I think we're going to get some mixed data. I'm not sure if it's going to be the JOLTS report. I'm not sure if it's going to be initial jobless claims, or if it's going to be the big daddies on Friday, which is your non-farm payrolls or GDP. But what I anticipate, right, is I think we're going to see an overall slowdown. We're going to start seeing a pullback in the jobs market. It's not going to be drastic. I think some numbers may look a little bit better than others, but I think that the painting's going to be on the wall that we are starting to peel back. And let's not forget, we talked about it a couple weeks ago, stagflation, right? Stagflation is going to be low jobs. It's going to be low consumer confidence, so low spending, but inflation's going to be persistent. And let's hope that the Fed has the solution to avoid stagflation. Whether we're in it right now, which is what I believe, we're kind of on the onset of it, but do they have the ability and the foresight to kind of see that with this election coming and everything else for us to avoid stagflation? Because I think that is going to be huge. But my anticipation for this week is we're going to get a lot of volatility. I think the best thing you can do is have your client on speed dial with their mortgage professional. Once again, you want to lock in those lows when you get dips, right? You want to lock them in because you want to hedge against the fact that data may come in very strongly against you. And this market is so volatile, rates are moving very quickly. So I want to make sure that, hey, you have somebody that needs somebody to talk to at a moment's notice and is available all the time, 24/7. I'm that guy, right? So make sure, and if it's not me, make sure they're talking to somebody that is that guy or gal. All right, that's number one. So, this weekend I started getting a lot of questions, and I've been having it, but what it made me really realize is a lot of clients have this question: are we in a seller or a buyer's market? And right away I was about to answer them very quickly with what I've been reading in the national news. And I had to pause and stop myself because, as you know, we talk all the time about real estate is a hyper local market. So I personally had to take a deep breath, and I reminded myself, don't just blurt out an answer. What you want to do is ask questions. Well, why are you asking me that, right? And the main question was, hey, I want to know if it's a good time to buy. But my point is this: we constantly need to remind ourselves and educate ourselves and know our numbers for our hyper-local markets. You are an expert if you know down to maybe a neighborhood, a zip code of it, whether it's a buyer or seller's market. And the other things, the main questions that I had, or the main things that I asked them, and I kind of pointed out to them that they would want to consider, and I hope this helps you if you're out there, is, a buyer or seller's market is going to depend on a lot of things, and this isn't all the things, but it's the price of the home that's going to be number one, the price range, right? Because it's going to be very competitive or not competitive depending on where you are in that price range. What is the zip code of the home? We already discussed that. What is the condition of the home? That's a great one, right? Is it super competitive right now? Is it a buyer's market in the ones that need fixer up? Or is that a seller's market if people are just willing to let it go at a deep discount because they know it's got a lot of work, right? So that market is always going to be different. What's the schools of where the home sits? That is always going to be prevalent, because if you have a great school system, usually that is going to be a seller's market. But again, it's going to depend on where you are in the country and so on and so forth. A lot of factors. And the last one I had, is it a new home or an existing home? That is also going to weigh on whether it's a buyer or seller's market. So once again, you really want to make sure that we're educated, that we know this information. We want to know our clients' needs, what our clients' wants are. And then even if we don't know the answer right away, we're going to go do the homework and we're going to break it all the way down to get them the answer. And then the last thing that we've been discussing on a weekly basis is how the hell do we move more homes, right? As we saw last week, pending home sales was down 7.7%. That's not good, right? So we need to figure out a creative way to move some homes. So what I did is I went in and I did some digging on my mortgage side. And what I was able to find is I located one of my lenders who is willing to do an absolute zero down loan. And yes, you heard that right? I just sat through on Friday, although I was overserved on Thursday. I stomached it and sat through for all of us. And basically what it is it's an FHA loan. So is it going to pertain to every house that's in the Austin and surrounding area? No, but the beauty of it is the average sales price of a home in Austin, Texas is about $565. So this FHA program falls right into that, because I want to say the FHA limit is what? $571, $550. Perfect. Here's the catch, and the beauty of it is this particular lender that I've discovered requires no down payment. So the 3.5% is given to them in the form of a grant, i.e. gift, that they don't have to pay back. It's not a second lien on their mortgage. They only have to stay in it for 6 months. So you heard that right. In 6 months, that's the only requirement that this really has. If they want to refinance, hey, amen, go do it. So the biggest thing I'm saying is, if you have a client that falls into this price range, we should talk sooner rather than later, because who knows how long this lender is going to be offering this program. If you think about it, they're gambling in the fact of giving away this 3.5%. They must be making it on the back end yield spread of their secondary market. but who knows how long that they're going to be able to stomach those potential losses, so to speak, on their books. But do we care? We don't. We just want to take advantage of it today. We want to move home. So what we're looking for is we're looking for potentially first-time home buyers, or it could even be, it doesn't even need to be a first-time home buyer. The requirement can be a second, it doesn't matter. It doesn't matter where they fall on the spectrum. It just needs to meet the loan limits that you're going to see right here in this email. So you want to make sure that you look at that, because what a blessing that somebody can move in at 100%, not really overly concerned with what current interest rates are, knowing that in the future they're going to fall. They're more concerned of, A, I get to move into a house, I get to live the dream, and they understand and appreciate the fact of where home prices are today, where home values are today to where they were, realizing that, hey, 5-10 years down the road, I'm going to make a killing on this house. So I hope that helps. I hope this was much faster. You are out there, Jen, telling me that I need to talk a little bit faster. Anyway, I hope all this helps. I hope everyone has a great week, a slamming week. You need help, you let me know. I'm happy to answer any question you have, run any scenario. All of you, happy selling. Good luck out there. And if you need anything, once again, you give me a call right away. Talk to you soon. Have a great week. Peace.